Hello, everyone. Grüß Gott, Florian.
Hello and hello.
Hello. Welcome, everyone, at the Talks with Leaders. Now we will talk with Florian Ott from Erste Social Finance Holding. Florian is a social banking development manager, but also authorized officer at the Erste Social Finance Holding. And today we'll discuss the involvement of Erste in financing social economy. As the introduction, I also want to mention that Erste Social Finance Holding is a joint venture of Erste Group and the Erste Foundation. And last year it launched the quasi-equity and innovative social finance instrument to support social organization in scaling up. And it is available in Austria, Czech Republic, Slovakia, Serbia, and Croatia. If there's something to be added, Florian will have space to do it. And thank you very much for joining and willingness to contribute to our conference. And
thanks for having me.
Yes. And we have 20 minutes to discuss your experience and your view on the sector. And I would like to start with quite a broad question of the trajectory of the history of Erste Group being involved in financing microfinance or social economy, broadly speaking, and how this changed over time and how it translates to the tools that you're using.
Thanks a lot, Nina. And great to have the opportunity a bit to share our experience and see also that this topic of how to support the social economy and the social sector is getting in general in the spotlight of microfinance institutions, because I think there's still quite a lot that has to be done. I think you've asked about our history. Luckily, as a banking group, we have a quite long history. So our banking group exists for more than 200 years. And you can say somehow this support is a bit part of our DNA. When we had our founding deed 200 years ago, it was stated that we are supporting people in the region we're operating, regardless of race, religion, and so on. So which was at that time really a big thing, that you can say we are really trying to support the general population and not only segmented segments. So really include everybody. And also had as a founding mission to foster building of prosperity in the region where we're operating. So, of course, this went over time and a lot of evolutional steps, but I think it was still hold in the DNA of the organization. And to give you one example, in 2006, we then set up a separate banking institution in Austria called Zweite Sparkasse, which is itself part of the social sector, you can say, by really serving financially excluded and non-banked people that were not served by any other bank, and having here really focused on the debt advisory topic. And in 2016, we then started with our broader social banking activities, where we addressed in, as you stated, our core markets. So that's Central and Eastern Europe, where we're having the 7 core countries in which we're operating, and where we tried to support in a broader sense financial inclusion, having 3 main segments: private individuals, which are facing marginalization, exclusion in one or the other way, also small micro companies, especially starting enterprises, which have nowadays a really hard time to get financing to get a business started. So I think that's also quite a bread and butter business of microfinance institutions. But as a third major pillar, we also try to have an indirect impact by supporting social organizations. So when we're talking about social organizations, these are on one hand NGOs, like typical non-for-profit entities, but also this, you can call it a bit newer segment of for-profit social entrepreneurs, which are still following some business targets. They can also generate profit, but the primary focus point is the social impact. And this is like where we started from in a general sense.
Yes, and I want to jump into the question of how with what tools, with what solutions you are supporting the last group?
Yeah. So initially, and this is, I think, the general setup of a bank. You can support on general sides on one hand with general bank services, current accounts, payment services. But most of all, we saw that this science segment is really excluded from financing, from debt financing. This is where we started really with traditional banking instruments like investment loans, working capital facilities, overdrafts to really manage the ongoing business, and also specific instruments which are especially important for the social sector, where you see a major part of them is very dependent on subsidies and grants. And here, from the structure of this, there's initial payout and the part paid out after successful project completion. And you need to have in particular bridge financing, pre-financing solutions. And this is really the major part where we started with the offering to have really funding, financing, debt financing solutions in particular. And now going through the evolution, what we said, we immediately realized that purely providing financing is not sufficient for none of these clients groups. So giving them the money is a nice thing, but still you must also think about what can be some additionalities and add-ons. And so we were also having the second pillar of the non-financial support, which is a very important thing, because if you're talking with a manager of a NGO, a non-profit, they're usually very good in what they're doing their social mission. They are really very experienced in this. But when it comes to financial planning, even fundraising and such topics, these are usually quite challenging topics where we saw it's important for them, and it's also important for us as a financing provider to really offer this non-financial support on top to really help them to develop and grow. So this was a bit the first step that we take. And and I think then that brings me already probably a bit the challenges that we had on the way there. Because I think all of this goes over several iterations. So the first challenge that we were, I think, facing is really the aspect that as a banking institution, we are very heavily regulated and having a very strict risk requirements and rules we have to follow. And a lot of these existing rules did not really fit for this client group. So when we say, okay, we want to have a certain profitability of organizations that we are financing, and you're financing nonprofit organizations, this is a bit contradicting each other. So there are a lot of other requirements and strict regulations out there, which really makes it hard for traditional banking institutions in particular to financing them. So our conclusion was that we need to have also a special risk framework for this. So we have a separate dedicated group risk policy for our social banking segment, in which we try to embed all the specificalities. And we're also having our dedicated risk budget that we say we do not really need to compete with the regular for-profit business to say that we achieve here really and aim for a social impact and following the social mission, and can really foster the development, especially for social organizations. So this was a bit the first step and the lessons learned. And I have to say, this is also a continuous learning and experience that we are gaining. I want to also clearly say on this segment, we get a lot of freedom and flexibility, and we are also heavily benefiting from support instruments, like, for instance, guarantee programs of the European Investment Fund, funded by the European Commission, where we say certain transactions can hardly be otherwise managed without this, at least risk sharing with European institutions for this client segment.
Now I wonder, to what extent then, when working with, because you mentioned two types of social actors, traditional non-profits and the social enterprises, that they have more of the business model, but to what extent this is, from the point of investors, it makes sense to engage in the sector, and to what sense it's kind of the sort of activism?
That's a very good question, because I think that brings us also, and you mentioned this initially, this topic that we have launched a new financial instrument last year, because you're fully right. There are these two different types, which also from a legal structure are quite different. And taking now the example of traditional NGOs, which are usually structured in the way of a either association or foundation, depending on the different legislation in Europe. And there, a traditional investor placing in equity, like a capital injection, is having a hard time, because if you go give equity to a association, you can usually do it only in the way of a donation, which is not really what usual investors are aiming for. So as a matter of fact, you're only having then the option as a philanthropic investor to go into this segment, versus with social enterprises, where you often have a structure of a limited liability company. At least you can take a share, and you can also benefit from potential future revenue. So that's then the structure when it makes a lot of sense, especially for a growth strategy, to focus about this legal form. And what we see in our region, not only in our region, probably also you see it in Germany and Western and Northern Europe, there's often this combination of a more traditional NGO structure with a for-profit element with different legal structures to benefit from this both setup. So nevertheless, I think both are showing one similarity, especially when it comes to growth. They are traditionally underfunded, because venture capitalist funds wouldn't invest in them. And also especially when it comes to growth story, with regular donations or donors and philanthropic investors, there are some limitations. So what we tried to develop and work on is a sort of mezzanine financing structure, a quasi-equity instrument, which is somehow a bit where we moved out of our traditional comfort zone as a bank to give just regular debt, but having here a subordinated structure, taking a higher risk portion, without really being in as a shareholder and signing equity of these organizations. So we are giving them growth capital, where we try to especially step in for a certain time, also with a predefined exit scenario that we say, okay, we're going to give you this funding, and at the moment don't even participate in potential upside effects. So what we see this as a quite useful instrument, because we can serve both groups, the NGOs, the association structures, the non-profits, as well as the social enterprises. And it's also a quite helpful instrument to do this as a support, because the reason why we started this was also that we realized as a bank with pure debt instruments, we are limited. So we cannot really support all the entities that we want, and where we see the need to help them to scale and to grow. And that's really the big challenge that we are seeing.
Yeah, and from what we are saying, it seems like there's a lot of learning from both sides of the institutions like Erste, and also from the part of the social enterprises, yeah, because this is just not so natural to even combine these two financial instruments, and the knowledge about this, I guess it's limited. So I guess it's one of the challenge.
Indeed, yeah, that's some lessons learned. And I think, first of all, it starts always with developing a common language. When I also have the pressure sometimes to join such NGO academies and exchange with them about access to finance. And it starts, for instance, with the word equity, where a bank has a very clear understanding equity related to capital versus equity for a non-profit is something quite different, like the more ideological and willingness meaning of equity. So it starts really with this understanding what is meant with this, and especially in the early stage, the organizations think about funding, and they don't care about if this is debt, equity, mezzanine financing, and so on. But on the other hand, the organizations that we at the moment aiming for are already at the developed stage. They usually went through the first developed steps, even had the first funding rounds. So with them, it's then also easier to explain it, because you're fully right. It's something where you easily reach a certain level of complexity that requires a lot of communication and discussion.
Mm-hmm. Can you share with us maybe with how many organizations you are working now with this with equity, and I'll give one of the example.
Yes, love to. So just overall, when we're talking about what we have done over the years in social banking and financing social organizations, we were talking about around about 1,000 organizations that we have financed with traditional debt financing in amounts exceeding 100 million. So here we have, I think, a quite wide experience in the social sector in Central and Eastern Europe. With this new quasi-equity instrument, we are only kicking in where we have really certain cases. So a lot of them, we try to still find ways where either debt financing is possible, or we only provide non-financial support in some cases. So far, we went through the first 3 fundings. We are now have 2 another one in the pipeline. And generally, we are financing for social business in the range of minimum 50,000 up to 300,000 as a ticket size. When it comes to real estate, social infrastructure projects, we can go with the debt with the quasi equity financing up to 1 million euros.
Go ahead.
Please. No, please go.
I was wondering, what challenges do you find here in the Eastern Central Europe?
Yeah, so I think when we are talking about, for instance, the cases that we have financed so far, there were really typical challenges that they were reaching a certain barrier. So, for instance, the first client we financed, the company Signtime, was developing an avatar solution for deaf people, coming for the problem that if you're especially born without the capability to hear and listen, you will hardly learn to read in a proper manner. So the access to information is very limited. So they developed an avatar solution that does really a sign language translation to really open this from multiple aspects, from traffic information system up to how to read the medicine instructions in the proper way. So this is a quite helpful instrument, but this was developed with the help of subsidy grant programs. And then they were really lacking the funding to really have it to the next step and reaching out to the market. And I think this is something where we see the importance to really help them to have this transition from a purely debt from purely subsidy and grant-based funding to a business income structure. And on a European level, this is something also we have seen a bit that still there's a very national view. And here I think we would see the biggest potential also with the social enterprises that we were now funding under this quasi-equity instrument. We were especially helping them to expand in also more probably in Central and Western Europe. And this is a good thing to also cross borders. What we would really love to see also more is the expansion in the other direction, that we are helping organizations from the social sector to move from the West to the East. As we have seen it also, I think after the fall of the Iron Curtain from the typical commercial industry, like all the Western players moved to the East and helped them to really develop. And there is still a big conversion topic in the social sector. To just give you some indications, so on average, we are having an employment rate of like 4% in the European Union that are employed in the social sector. In Western or Northern Europe in particular, we reach sometimes more than 10%. And in Eastern Europe, we have often an employment rate of less than 1%. So there is really a huge gap for multiple reasons. But what we think also bringing the experience, the know-how, and the setup from the West to the East and cooperating in a stronger way would be really a huge potential, which we would like to see more often to happen.
Yeah, being conscious of time, that's the time is flying. But I really I want to ask you, because this is this internalization part. It's super interesting. If you could maybe name a few sectors, where would you see this kind of expansion or potential for learning from already matured social enterprises in the West to come to the Central Eastern Europe?
Yeah, I would actually have a hard time to limit it to any of the industries, because I think there's the potential and the need in all sectors. In general, now seeing to the upcoming green transformation, which is a very essential thing. At the same time, it means also a huge need for job integration, reskilling, upskilling work. I think that would be a really major part, this whole employment, job integration topic. Of course, the whole health sector, and in particular the care sector. So I think care work is coming from multiple directions. So elderly care is, I think, one topic that is not only an issue in Western Europe, but I think around the globe. But also on the other end of the scale, when it talks about childcare services, I think this is a very essential thing where there's an under support everywhere. And I think this is really something that at the same time helps, and also about reintegration work, also helping probably women to enter the job market in a better way, and so on. And then there are, of course, important topics which are not that huge, but also very important topics of the whole circular economy, which I think goes with the environmental translation, where we see really huge and good working social enterprises in Europe, where I think there's also quite big potential in Eastern Europe to catch up here.
I think this is also something it's important, because these are the areas where state does not deliver properly, it seems like, and the creativity is needed. And I think this is the space for social economy to step in, and the social finance sector to support this.
Yeah, and I think it's of course needed to adapt then to the specialities on the local market. And I think there are really good initiatives started at an early stage. And I think I would really hope to see more often this cross-country cooperation. We had also some programs where we were bringing together different social sector and social enterprise players from different markets to exchange, because what we have seen within a country, everybody knows each other quite well. So they know which players are there. It's still a small sector, but we have seen that there are very similar social businesses from the business model perspective operating independently in different countries, and bringing them together to exchange, I think is quite a fruitful topic, because to be honest, there's also sort of limited number of working business models for social sector that can be really sustainable, cover the costs, and having the impact. So it's good to see if working models are faster replicated.
Thank you very much, Florian, from your contribution and for sharing with us. I want to see if there's any question from audience. Unfortunately, I don't see any, but well, I guess we explored the topic. So thank you very much, and I invite other participants for the poll that we will have in the end of this session, and I invite you to other sessions at the conference. And have a good day, Florian.
Thank you. It was a pleasure.
And
have a good day. Bye bye.